Hi, let's talk about Aethlon Medical. It's a medical technology company that focuses on developing products to diagnose and treat life and organ-threatening diseases in the United States. Full information not considered investment advice. So the market cap is quite small, but this company actually have serious future forecast and also health. So financial health is looking great. The trading is happening 92% below the site's estimated fair valuation, and earnings are forecasted to grow over 40%. But anyway, that is for previous trading day, and currently the stock is up to 360%. Huge upside. Currently they have actually, this is not some good news, so actually they have 50% downside. So the same speed as it gained the gained the volumes and the price, I think there's high possibilities that it could drop to this previous levels that it has been for a while. So be careful on investing at those levels, at this price, because there's also risks. Volatile share price of the past 3 months, shareholders have been diluted in the past year. Also, they, based on simple Wall Street, does not have meaningful market cap, which is quite small, and makes less than 1 million in revenue. Actually, it's near to that, 832k, and the price went up since there's where capital raising, product updates, and so on. Anyway, market performance shows that 1-year return is 53%, beats the market, beats the industry. But here's the deal: shareholder returns, 3-year return is minus 88%. So those who were long in this company, you see it, 5-year return minus 97%. Hugely down, and yeah, this is unfortunate. Long-term price volatility is lowest, and the industry itself is less volatile than average volatility. So if you like to get more of the less volatility than the US market, you could just buy industry, Medicare industry, which gives in 1 year 28%, 3 years 56%, 5 years 125. And yeah, you can just if your risk-taking abilities doesn't not allow you those kind of movements, and usually we see like 6-month frame, 1-year frame, 5-year frame. So in this 5-year frame, we see that it's downtrending. So 5 years ago the price were over $100 per share, and if you open up max, there's yeah, over $5,000 per share. So those who invested earlier, okay, 20 years ago, but anyway, it just dropped immediately from there. That's kind of unfortunate, but anyway, usually if your risk-taking abilities does not allow you to like this kind of risk all time, minus 99.84, almost all of the capital that you invested in early stage of the all time, you're like, if you're not fixing it, you're losing, but you're not like losing real money. So it's just the assets that you have. Anyway, based on simple Wall Street, the valuation should be around $27. I think the simple Wall Street calculates more of the fundamentals, and as I said, tip rank shows $5, and yeah, in good scenarios it could be, yeah, $5 per share, and Market Watch has pretty similar, in good scenarios, $6, average of 5.5. So I think the stock price could drop to this number, as you can see here, 5.5. But mostly it could even drop to the 1.5, 1.8, 1.9. So be careful. And yeah, as I said, it has pretty good future, 40% forecasted annual earning growth. The dynamic shows that the revenue and the earnings have been on the earnings have been on the negative side, so they're not profitable currently, and their earnings per share growth is forecasted as well as to grow. They might become profitable within 2 years. 2023, there's forecasted EPS 1.4. That is good. Past performance, as I said, the company is currently unprofitable and pretty volatile on the revenue and on the earnings. It's better than they had 7 years ago, but anyway, it's still pretty risky to invest in the company that have, yeah. And actually, this is one of the things of the debt to equity ratio. So one of the good things that they have no debt, and they do have a lot of cash compared to the debt level. Equity 11 million, 12 million of cash, and yeah, so I see this trend that usually the companies are not taking the debt, but they are printing the shares out. So currently 10 million shares out, previous year 3.4, and 2 years ago 1.2. So 10x in the shares printed out. So I know that that's for the expansion reasons, some of the product updates, researching, and so on, development, investing in new stuff, and so on. But anyway, this is hurting the investor very, very badly, but it's good for the company. Total sales pretty volatile, as you can see. They had some of the better sales last like 7 years, but they dropped and they raised again. And yeah, for me this is not predictable as for example in the big cap companies that have pretty much the ready cash flow and so on. Yeah, balance sheet looks green. They have cash and short-term investments 12 million. Then at paying dividends and insider tradings. So there's actually, yeah, there's individual that have been selling, but not so significant sum, only 56K at the price of $2. So he could wait a few months, okay, half year, probably would sort, yeah, 5 times better. Anyway, ownership breakdown, yeah, mostly this kind of companies where if we open the max, there's a decreasing this trend. Usually they are holding by the general public 89%, institutions owning 9%, and I think it could of course start within the, for example, institutions holding in 90%, general public 9%, and the institutions, if they feel something wrong, they just decrease the ownership of the company. And here we go, general public holding mostly, and insiders owning less than 1%. Anyway, top shareholders, I see here many of them increasing, so nobody actually have been selling, but last reporting holding date 1st of April, 31st of March, 1st of April, yeah. So last few month data here, and yeah, pretty volatile. It could drop to the 5 or even to the 2 or less. So be careful. Investing.com, summary of the stock for long-term investors as a buy. Technical indicators strong buy, moving average neutral. Thanks for watching this video, subscribe to the channel, like the video, and see you in a future one.